The US government may have reopened, but that is bringing little joy to the markets. US stocks are set to fall for a second straight week amid concerns over stretched tech valuations and on declining December rate cut bets. It's not just stocks that are lower. The US dollar is also looking at a weekly decline, while gold, despite falling 3% over the past 2 days, is on track to rise 1.5% this week. But what about next week? To discuss what we should be watching, I'm joined by John Kicklighter, Head of Global Content. Thank you for joining us, John.
Thank you for having me.
So the markets are retreating further from record highs. Is this a pullback or something more ominous? Is that bull trend still intact? What are the general market conditions we should expect to be dealing with next week, and what markets are you watching?
Sure. I don't want to be a cynic, but I am generally skeptical of big changes in direction and big changes in tempo. And that's usually because markets don't just change direction on a dime, especially major trends. These are very rare occasions when you plot out a long term. But the same is also true of a sudden change in tempo. So a congestion to, say, progress, whether it be with the dominant trend or not. So it's always important to look at the markets in a way that's a little bit more balanced and reasonable and skews towards probabilities. So when I look at the pullback that we had this past week in risk, I think that there was a lot more breadth to the risk aversion, which had started earlier. We had more depth to the risk aversion. And now it's just, I think, time for us to look for some time/progress. So you have to make significant progress towards, especially towards risk aversion, which would be a reversal in the main trend. And I'm talking about, obviously, about benchmarks like the S&P 500 or major global equity indices, carry trade, high yield fixed income, emerging market assets, all those things that align to risk and are inversely correlated to safe haven assets. But it's the sentiment that we're looking for. And I don't think that the markets will so readily give themselves over to a major shift in sentiment, especially as we get into this back end of the year where seasonality really restricts us. So in terms of the markets to watch for, I'd be looking for something like the S&P 500 and the Dow in particular. Those are two, obviously, U.S. equity indices and major equity indices, but comparatively, they're broader. And then you have the blue chip, which is the Dow. And they both have very regimented, consistent trend channels for multiple months. The S&P 500 is kind of testing whether it wants to break below its 50-day moving average for the first time in 138 trading sessions, which is a very long duration move to the upside. So you have technical barriers and boundaries, but also benchmarks on the sentiment side of things. But if you want to look deeper into it, and this is something that I like to look at, I like to look at ratios, and you have to align markets that are kind of related. So if I were looking at, say, the NASDAQ 100 versus the Dow, that ratio, you start to look at a market that is focusing on the top end of interest for tech. So that AI interest you're talking about, that ratio between, let's say, the S&P 500 and the RSP, which is the equally weighted S&P 500 ETF. So you start to see the appetite, not just for the biggest market caps, but you also see it broadly across the market in that comparative ratio. You could also look at something like the Dow versus the Russell 2000, which is a large cap, small cap comparison, and that tells you the distribution. And of course, if you're seeing risk aversion or if you're seeing a rebound in risk appetite for the dominant trend of risk on, then I would be looking at additional markets like Bitcoin or emerging markets, and then I'd look also on the non-traditional, traditional safe havens because they have they've skewed away from it recently. Gold and dollar; those are a lot of markets to watch, but this is a important expectation of transition. So you really want to be convinced that it's making such a transition.
And so you've talked about risk sentiment there, but what are the other most important themes that could be upending well, I would say the calm, but there isn't much calm at the moment. Which were the most potent themes that could be in focus next week?
That's where it's interesting. I think a lot of it is justification. So we've seen all the headlines suggesting that AI has overreached the investment and the speculative premium built into the market and its secondary impact. That conversation's been going on for a long time. So why is it getting traction now? And the same is true of like the Fed December rate cut, and whether it's actually going to happen, whereas previously it was priced in. Those expectations have been oscillating quite a bit. So it's interesting that it takes now, and I think it's because it's risk sentiment first, and it just happens to be built upon the foundations of whatever in individual market or investors' expectations are defined by, but they're coalescing, they're converging on that pullback and risk sentiment and that conviction and overwrought conviction. So I don't really see a strong fundamental lead as of right now, but I do think it's quite interesting that even though we had the end of the US government shutdown, the longest in history, that would carry with it some sentiment of a discount that could offer a rebound. And that played out very quickly. Even if you want to adapt it for the buy the rumor, sell the news kind of mentality, it was a very modest buy the rumor. And then we've had the further pullback from the trade wars of earlier months, as that seems to be less and less of an issue. And that isn't giving us much additional lift. So it's a struggle to get that bullish conviction. And I don't think that there is a very discrete or specific fundamental theme driving the reversal. But it's important to keep tabs on this because there will be a guide that comes up, and once the markets affix its gaze on whatever is the top headline, if it continues to deteriorate, it can offer that momentum.
And although we say that the US government has reopened, there's still not much clarity over when US data will start to be released. With that in mind, what are the top event risks for next week?
It's a very important point. I will be watching these websites like a hawk to see when they intend to actually release their data, because we are down multiple non-farm payrolls, we're down multiple consumer price indices. These are very important indicators, can feed into something like Fed rate expectations, but also the general health of the economy, which is starting to waver in terms of confidence for the U.S. So definitely keep an eye on that through the week, and we will definitely be sharing when we find that it's been given those timelines. But if you're looking at the docket that we actually have that we can rely upon right now, it's very light. On Monday, I would highlight something like Japanese GDP for the third quarter. It's usually a later release as a major economy, but definitely important, especially with the stir in change in political leadership, as well as the pressure being put on the Bank of Japan. We also have Canada's CPI. That's worthy. Tuesday, I will be watching the U.S. Housing Market Index from NAHB. That's certainly a theme that we've seen markets take interest in because of the pressure, and there's deeper demographic concerns, but it's also indicative of the lack of affordability, which is an inflation consideration in the United States. Wednesday, UK inflation, definitely worthwhile, but the big event risk, and maybe the top event risk for the week, it depends on how the markets are aligned in their global macro focus. Nvidia earnings after the US close. That's going to be a big one. Definitely keep that in mind. Even if you're not an equities trader, it is very substantial and carries a lot of global macro weight. Thursday, we have the PBOC and their rate decision, not expected to change, but certainly worth keeping a tab on. We have earnings before the open, including Walmart. There are a lot of consumer-oriented companies reporting this week. And then Canadian Business Barometer, which I think is important with the still fractious relationship between the U.S. and Canada. Through Friday, Japanese CPI, and maybe the most thematic of the event risk, focused on general growth in the developed world, we have the November PMIs. And maybe a word to the University of Michigan Consumer Confidence's final reading for the past month, because that is definitely an area where we see still clarity and still updates, and the consumer is the largest component of U.S. economic growth.
Thank you once again for your insights, John.
Thank you.
For more videos like this, please do like and subscribe.